Hey Alpha fan, welcome back to another episode of Alpha Commission. Guys, today we just want to go over the Bollinger Band's midline here on the weekly. As you can see that this is the first week that we've really been embedded underneath the Bollinger Band's midline on the weekly. So we do have 3 days to go. We could surprise everybody and just pop right back above it, just like what we did over here when we were dropping below it. But we weren't really having one candle embedded below the Bollinger Band's midline there back here. We did have a fake out up here in March 2022, and so that does give us hopium that we could do something very similar, just something like that, just kind of a flash wick, and then just keep going. And that would be very consistent with that falling wedge kind of fake out before the breakout. And so there's your hopium, guys. But overall, you can see that in the past market back here in 2019 to 2020, we had a very similar rise above the Bollinger Band's midline here. Right. And then once we finally broke that weekly to the downside, and then we started to put in one candle that just got embedded below it, then we did go for Mr. Toad's wild ride right underneath the Bollinger Bands for quite some time. And it actually took, let's see here, that was 9 2019 all the way to 4 2020. Let's actually say maybe 5 2020. So we're talking about a good 8 months of just sideways and down. Now, do I put that beyond us to happen? No, it absolutely could happen that way. And so that's why I just want to give that warning out there. If we don't get the reversal this week, at latest next week, then you're going to have to watch out for us getting embedded underneath the weekly Bollinger Bands midline. Of course, if we throw on our EMAs, as we've already discussed a while ago, we had the bearish cross with the 4 and the 9 all the way back here in around May 8th or so. And then, of course, we got that bearish cross with the 9 and the 21 coming up, pretty soon. But anyway, guys, we've just been underneath the 9. That's never a good thing. And so, we just continue to press on that 200 EMA weekly to the downside. And if we break that, I just think it's going to be very difficult to get unembedded from the Bollinger Band's midline. So the one thing that I just want you to take away from this is that our EMAs warned us right up here when we had the 4 and the 9 cross. Of course, that 4 is my trademark EMA there. So we did suggest that was a very toppy point, but that this was a bullish pattern. These bullish patterns don't always have to work out. I do want to show you what can happen in the past. Here was a falling wedge. We broke down. We were never able to flip above the Bollinger Bands, and we just kept going down. So this was something to do with just weakness in the markets in general. Are we going to just have weak markets in general, and are we going to basically do a fractal of that and come back down maybe to that monthly pivot that I was talking about and do this kind of double bottom on the charts? I think we have to reasonably consider that possibility. On the other hand, if we are again able to flip above the Bollinger Band's midline, then when we get abandoned that way, we just ended up going for some type of run to the upside. So, right now the stock market is in an actual bull market. So, or at least a bull run, guys. So, it's very hard to say what's going to happen next. I just want to point out that we do have that warning there. Now, if I go ahead and go to the 2-week, which is what I think is actually leading this market, then we can see also the same thing here, where we do have this kind of zone before we come back to tag the 2-week Bollinger Band midline. Now, that could be considered kind of bullish. that we were just a little bit overheated. We need to come back to the mean average, and then maybe we can continue on our way. And again, the same thing happened over here. Basically overheated, came back to the mean average, just kind of played around with it, and then we continued on our way. Now, a lot of people could say, well, during the virus era, this really wasn't supposed to happen. Okay, like this crazy drop wasn't supposed to happen. That was some type of a fluke in the charts. But, flukes can happen and maybe something crazy happens in the world, okay? And so do we end up dropping down here or not? I don't know. Otherwise, we could just, tag the Bollinger Band's midline, kind of, caress it for a while, and then maybe we have our bull market 2024, whatever, towards 2025, right? The real one, okay? Like the big one, right? Uh, and do we have some type of accident between then and now? I don't know, guys. I'm just saying we're coming up on this parallel, this kind of a fractal of what we've done in the past. And we've already commented on this many times several months ago, like 3 months ago. We talked about the possibility of this. And, whether we were targeting, this liquidity or we were targeting this liquid, it doesn't really matter. We knew that this fractal was possible. And so here we are on the actual weekly proving it with one candle. Okay, we have one candle of proof so far on the weekly being embedded underneath those Bollinger Band midlines. Again, if it doesn't reverse in the next 3.5 days and flip on top, and then just kind of be like this kind of wick that then just pushes up, then we're going to have to really consider the possibility that we're going to be in this thing for the long haul. Okay, so I just want to make sure that I got that out there. Okay, guys, don't tell me I didn't warn you, because we've talked about these things many times. And if we go ahead and just go down to the 6 hour, we can also take a look at our good old falling wedge, just to see how we're doing on it. And one thing that you will see just right away is that we are actually popping back into it. So we were breaking down, but we're popping back into it. And so there's still an open question: are we going to hold the bottom of this wedge, and can we push up to 26,500-ish and kind of save our butts? Well, anywhere under 26,500, anywhere under 27,000, I'm really not excited about this chart. I've been telling you that for quite some time. When we broke under 27,000 here, I told you that was a warning signal. When we broke under it again, I said that was a warning signal, but we had kind of a double bottom. We launched off that double bottom. This could have turned into just a failed head and shoulders, but as it happened, we came back down. We ended up breaking down below that 27,000 once again. Another warning signal, but we held the bottom of the wedge. So of course you want to long there. We longed it. We got almost to the other side of the wedge. And then just in the last few days or so, we've just been having kind of a catastrophic breakdown here. And now we're losing the bottom of the wedge. And just today we're popping back on top of it. So I don't know, is this the fake out? Okay. And are we not going to do the measured move of the head and shoulders here? Well, I'm not so sure, okay, guys? I don't have any indication that anything's over yet, okay? From my perspective, this could be kind of another type of fake out, right? Just like they constantly were pumping us up, right? Even though we were being sent down. These were basically fake outs, right? This one right here could also be a fake out before we get sent lower. So I just want to be very skeptical unless we flip above that the wedge midline here around let's just say 26,000. And I'm still not going to be very comfortable unless we're above 26,500. And I can't really be too bullish unless we're above that 27,000 that I've literally been saying for months is the floor that we should have here in terms of bullishness. Now, on a macro level, am I still bullish? Yeah, of course. But on the local level, of course, as soon as we break 27,000, I've been bearish. And as long as we're inside of the wedge, I just can't be too bearish or too bullish because we're literally just ping-ponging inside of the wedge, okay, guys? And again, we're just back there again. Like you can see, like our price action is right here, right now, right? So we're just literally back in the wedge. You know, they could do this thing where they take us all the way to 26.5 and then they drop us down. I mean, it's just the market makers are just free to do all sorts of shenanigans. And the weekend's coming up, so that's just going to give them even more low liquidity conditions in order to do shenanigans. However, just to keep everything realistic, I just wanted to remind you that if we do put a floor here, this so far is just a a bearish retest, okay? Unless we flip it, you know, it's not a bullish retest, it's still a bearish retest, and then we could easily continue to break down. I just wanted to emphasize the measured move for this head and shoulders is that 22,900, so basically 23,000 is the measured move. That would be very consistent with a fake out on a bullish wedge breakout. And what I'd love to see is just a flash wick down there, and then a flash wick just buying it all the way back up. Just you know, institutions and whales and smart money just buying it back up and bringing us back into the wedge, and then flipping on top of the wedge, and then let's go. That would satisfy the conditions on those Bollinger Bands midlines on the weekly, which would then just give us a little flash wick there, as opposed to as opposed to us having a full kind of breakdown, right? You know, we could just get a flash wick down here and then buy it back up exactly like this wick right here. That's what I would want to see. And as long as we get above 26,400 is what this one is saying, but 26,500 to be safe, and then especially 27,000, then I'm going to say, okay, yeah, this is cool. But if this candle to the downside gets too chunky, right, it's going to be doing what I call getting embedded. Okay, so if it's getting embedded below the Bollinger Bands, then that chunk, it's like this is a needle, right? This is a surgical precision. This chunkiness, it can't be withdrawn, without major damage. So we just have to watch out. And yeah, I just really want to give you that heads up that this pattern doesn't have to play out, and that if we do get embedded under those weekly Bollinger Band lines, it could be a good solid 8 months, before you have the chance to get that measured move. And even then, we could have some catastrophe that brings us back to a double bottom, and then it will be just a couple several months more before we have our bull run, right? So just be super realistic about what's going on, and just understand the week hasn't closed yet. We have 3 more days. This is the week, right? Yesterday was the day we had to perform. Bitcoin failed in its performance. This week is the week we have to perform. And so far, it's a little bit too chunky. Okay, I want to see a flash wick and then a buy back up. It's a little bit too chunky. Okay, but we're still inside the wedge until we officially break down from the wedge. I'm okay. It's just we're embedding underneath those Bollinger Band midlines. And I know I'm repeating myself, but I think it's just worth being super clear about that. Okay, guys. Now that we've got those kind of structural things, out of the way, again, we can just take a glimpse at the EMAs here. And I just want to point out again, like the EMAs showed us that we had a cross between the 4 and the 9 all the way over here. Okay, at least on the SMA, and so that was our first kind of hint. Yeah, this thing could start breaking down. Later, we had a confirmation of a cross between the 4 and the 9 over here. This time the EMA, and that was like basically confirmed. This thing is breaking down. And we haven't actually had a cross with the 21 and the 9 yet. And so again, there's still that chance for that flash wick. That's basically, you see what's happening here. Here's the 9, and here's the 21. Okay, and so if we go ahead and just, let me just turn off some of these other things so it's not so distracting. see if that's better. Yep. You can see the 9 and the 21 here, they didn't cross, and so that gave like a little bit of room for this flash wick to just squeeze up through there. Now, right now, we actually have a little bit of room. Here's the 9, that red one, and here's the 21, the yellow one. We have a little bit of room for a flash wick. Like if this candle just decides to like flash wick, flash down and then flash up, then there's a little bit of room for it to squeeze to the upside. But the problem is over here we had the 4 on top also giving it breathing room. Here we have the 4 cutting across, and it's basically narrowing the gap, okay? And so the gap is incredibly small now. And this is just, as of today and yesterday, okay? And so this is the new update. We've basically intruded upon the 200 SMA's territory. That's 200 SMA was what was giving us the breathing room and this gap between the 9 and the 21, and it's just not there anymore. And you can see the Bollinger Band's midline is right there, right at the 4 right now, and so they're crossing bearishly, okay? And again, I tell you guys, the 4 is my signature EMA, okay? This, not a lot of people use it, to be honest, okay? But the 4 is my signature EMA. I'm seeing it cross the Bollinger Band midline. I don't like that, okay? I don't like it crossing that way negatively on it, okay? So for me, this cross right here is a big no-no, okay? And we're gonna see what happens, but that window is incredibly narrow. We gotta perform. We gotta perform in the next 3.5 days, or just like a megalithic flash wick in the start of the next week or something, okay? Otherwise, I'm gonna be very worried about what's going on here. But hey, stranger things happen in the market, so we'll just go level by level as usual. And of course, we did sound the alarms up here. We did also get a confirmation over here, and then 27,000 has been our line in the sand. And so I hope you guys feel prepared. This is still a bullish structure. But 70% chance to break to the upside is not a 100% chance to break to the upside, okay? So just understand there's also that fractal from the previous cycle that could keep us suppressed for God knows how long, maybe 8 months, right? Let's go ahead and go down to the 1 hour to see how did we do on the, the last kind of pool that I gave you in the last episode. So in the last episode, this is what I was showing you, and we can see that we had pretty much 3 instances of breaking into the momentum pool. We were pretty much here when I was making the episode, and then we just had a little bit of intrusion on the inside. Normally that would be a long signal. So let me go ahead and just put on this learning here. That was a long signal. This is the 1 hour chart, but let's go ahead and jump to the 15-minute chart just so that we can get some detail. And you can see, as soon as we entered, right, the momentum pool, you could have taken that long, and yes, you would have gotten a win off of that. A really baby, tiny, teeny tiny candle. You had, 15, 30, 45, almost an hour to decide if you wanted to stay in this trade and to bring up your stop loss to entry. Okay, as soon as you were in profit, you just bring your stop loss up into entry. You had about 45 minutes to an hour to decide, do you want to stay in that trade? It ended up coming back to entry. So in this case, this was one of the rare fake outs, but I had told you in the episode that the volatility was looking like it still wanted us to push down. And so we did get that second drive down. And you can see we're underneath the volatility pivot. So because we're underneath the volatility pivot, there's just a greater likelihood that longs are going to fail when you're below the volatility pivot. If the volatility pivot was down here, then there's a much more higher probability that the longs will succeed. It's just the nature of volatility. Random volatility in the market will just kind of slap you down. But anyway, you didn't really get any harm or any foul here as long as you monitored your trade and immediately brought it up to stop loss or your stop loss to a break even. It's not like it flash wicked you out or anything. You had an hour to monitor it while trading on the 15-minute. So I'm just going to say this one is kind of a net zero. Sorry, maybe you had a little transaction fee, a couple bucks, something like that. But in this case, what it did is it positioned us inside of the pool, and so we were having price action to the downside when we broke the bottom of the pool. And in breaking down from the bottom of the pool, that allowed us to take a momentum trade because we should always be moving in the direction, right? If we're going to take a long, like we have to be moving from the bottom. If we're going to take a short, we have to be moving from the top, okay? You're not going to short when you're coming from the bottom. Okay, that wouldn't make sense. Your momentum would be opposite. Okay, you guys got to really understand that point. Like play it back a couple times if you don't understand. We were falling and we crossed this line, so you can take the short, and then you just bring your stop loss to break even, slightly higher, but more or less break even, and then you could just take that short. We did have a little bit of a higher low right here, so that would have been a change of character from this low right here. You could have decided, on the 15-minute that you wanted to take some profit in this area, or you could have done it here when you saw this buy up and this double bottom right there. So you probably would have taken your profit somewhere around there. Especially if you crossed the Bollinger Band midline here, you would have said, aha, we're no longer embedded below the Bollinger Band's midline. We're crossing it, so I'm just going to take my profit, and then you got that trade. Now, I'm sorry this wasn't a bigger trade. We're just looking at the 1 hour, okay? But again, you can do it on the 6-hour charts. You can do it on the daily charts. And it's the same principles, and you get a much bigger spread of price action over a longer period of time. You just have to monitor it for a longer period of time. And once we got on top of the Bollinger Band's midline, yes, as I say, you can take that trade. I only like to take that trade personally if the volatility pivot is underneath us. Then I would say, aha, we're getting above the Bollinger Band midline. We can take that trade to the upside, okay? But as it happens, the volatility pivot was above us, and so I don't like that. For me, it's just a little bit too risky. And so, you could do a Bollinger Bands trade if you wanted to, but for me, I just wanted to see us, because we could easily reject here, right? We could easily just break down again. And so for me, I would have just liked to see us break into the momentum pool, right? Because this volatility pivot's above our head, I want to see us actually capture a momentum level. And when we actually broke into the pool, you can see it was wick, wick, wick. Okay, here's a candle. Put the stop loss below us. We're going to take this to the other side. We did have the bearish control zone, and we're underneath the volatility pivot. So you probably want to aggressively take some profit, around that key level that's being marked out here. There's a reason why it's there. So you take a lot of profit on that one. And then, the rest of your trade, you see if it's going to hit to the other side, or it maybe even continue to go. In this case, it wasn't. It rejected. We had our little high right here, and then we put a lower high as we were kind of testing this bearish control line there. And then we ended up breaking down. So, when we put in this little bit of a lower high here, that's probably when you were going to take the rest of your profit. Of course, these are just little like trading principles. Again, we're just doing snipes and scalps, right? We're just sniping entries and taking scalp plays, because there's not much going on in the charts if you didn't capture this move that I had talked about in yesterday's episode. And so, guys, once again, the Alpha Fam is absolutely killing it. As you can see, right? As you can see, had you taken that entry using the momentum pool strategy, you still haven't been stopped out. You still haven't been stopped. You could literally still be in this trade. Okay, and you're not dead yet. For all we know, this thing could keep going and then flip up and then flips the volatility pivot, and who knows where it could go. Well, there you go. You can see it. You can see it live, right? And so the principle of entering here and bringing your stop loss up to just below entry, extremely tight, and you see a little bit of an interaction with this bearish control line there. So this is telling us the story. Okay, like don't question these lines. Okay. You didn't get hurt. You didn't get hurt here. Even we came back down, you didn't get hurt, okay? So I hope this is helping some people. I hope you guys are taking some trades based upon this. I hope you're managing your risk and you understand what stop losses are, right? And that if you're in profit, you can even move your stop loss into profit if you want to, okay? Like you don't have to have it at entry. Once this candle got sent, right, you could move it above that, above your entry. And so then no matter what, if you got stopped out, you still got stopped out in profit, okay? And look at this, it's continued to go. So all right, guys, we did a great job, okay? And yes, in this case, I'm actually really glad that there was a fake out because I wanted to show it. We just didn't have it, in the last couple reviews that we've been doing. We didn't have, a fake out really over here. We didn't have a fake out really over here. And, we had a whole bunch of little tiny plays, but we had a couple of juicy trades on this one. And we also had a fake out. So that's really cool to see, okay, guys? So we need to know how to handle those situations as well. Let's go ahead and just get off this 1 hour here. I wouldn't really consider that setup valid anymore. I'm not going to show the 1 hour right now. I think I do want to catch up with some of these 6 hour trades. So let's go ahead and jump to the 6 hour, turn off this learning. And here you can see that on the 6 hour chart, we do have our volatility pivot pretty heavily over our head here. And at 25,543. So it just suggests that we're kind of tagging this pivot here, and it's easily that we could get rejected. Okay, so just watch out on the 6 hour. We are tagging that volatility pivot, but we didn't really aggressively flip it or embed along it. So be careful. You can see on the 6 hour, the Bollinger Bands could go like that. If we are able to flip it, then maybe we could get something bullish out of it. If we get rejected off of it, then expect to continue to be embedded underneath the Bollinger Bands midline on the 6 hour. Okay, that's just going to enhance your short trades. And the 6 hour currently is not looking the strong, even though it's pushing up, and I like how slow it's pushing up, but we easily could check back, maybe try again, do that a couple times, and then just fail, something like that. Or we could just get slapped down, okay? Just very easily that's possible. And this thing would just be going like that, something like this, okay? The neutral point of control where bulls start to have some power on the chart is above 25,827. So we are pretty far from there. And, really we don't lose our footing unless we're below 25,112, in which case that's kind of a shorting opportunity, as is the top of the momentum pool at 25,291. This is a nice push, actually. So it's very interesting what's happening there. Yeah, we can watch that. But anyway, you can see what's going on here, Alpha Fam. Yeah, I mean, look, had you taken a long here, right? I mean, obviously, I'm just making this right here. Or if you've taken a long, here, then you could have potentially reached the next level, reached the next level. Those trades were perfectly valid. Okay. And same thing, if we break down, then you could take the trade to here. If we break down here, you could take the trade to here. If we break down here, you could take the short as well. And just manage your stop loss. That's all. Guys, let's go ahead and take a look at the old 6 hour chart, see if it was giving us a warning. It was. Look at this. We had our momentum pool up here. We had our volatility pivot, up here. And, as soon as we broke underneath that, we were underneath the Bollinger Bands. And what happened? Huge, huge downside. So the 6 hour was telling us, yeah, that was a shorting opportunity. And if you took it, congratulations, Alpha Fam, right? That was the old one. Let's go ahead and go to the daily. We can take a look at the previous daily over here. Did it give us any heads up about where we went? Well, yeah, here's the volatility pivot. Here's the momentum pool. As soon as we broke underneath the momentum pool, that was the shorting opportunity. And look at that, right? Look at that. We had a huge trade off of that one. So the day was also telling us to take that short, and you guys would have been wildly successful off of doing that. We were never above it. We were never really entering it, and so there was no long opportunity, right? Those ones didn't present themselves. So the Alpha Fam, again, you're killing it, guys. Here's the new daily. As you can see, we did have this set up right here where we're coming from these wicks down here. We pushed up. That was the cue to long inside of the pool, and then the pool suggests that we could get as high as 25,777, 25,746, and you can see that we are flipping the volatility pivot on the new daily chart. So that's pretty cool. Now we haven't held it or anything. We're just pushing above it, but we are above the volatility pivot on the new day at 25,371 here. And so if we do end up holding that and then we flip above the momentum pool, well, then that's going to be a clearance for another long. Okay, and then you can see the Bollinger Band's midline there. We get a better embedded up here. We grab the neutral point of control at 26.6, and then this all could have been just a fake out. Okay, we're not there yet, but we are doing interesting things on the day, assuming that we can hold above 25,371. Okay, hope this all is making sense. Until then, we're just grabbing this liquidity. Okay, and then we could get smacked down. But this is a nice pump. We've now recovered 50% of that candle. And guys, like the alpha, momentum pool is not lying to you. Like look at this trade all the way to the other side. Let's go ahead and put on the 2-day. The 2-day is actually closing today as well in 3 hours here. And so let's go ahead and look at our old 2-day setup. That's the new one, I think. Wait, can I see a difference? All right, well, this is the new one. So let's go ahead and just take a look at the new one. I may have just already reviewed the 2-day perhaps, but let's go ahead and just take a look at the new one here, and you can see that our volatility pivot, yeah, this is the new one, is at 25,500. Currently, we're above that, so that does give you it does give you permission to long, okay, guys? And if you were above this one, you could just take that long potentially to 25,930. There's no guarantee it's going to happen because we haven't captured a momentum, pivot, and we haven't, we haven't captured a momentum line, and also we're below the Bollinger Band's midline. So this is not the type of trade that I like to take. Again, like I prefer the Bollinger Band midline to be below us, and then we're above the pivot, and then yeah, I'll take that long like any time. I'd rather wait till we get to 25,930. Again, this is on a 2-day basis, right? So this is a very long time to wait for your trades. And so, if we get in that pool, then I would take it to the other side. Probably take some profit here at 26,260 pretty aggressively. And then if we were able to flip that, then I would take that to 26,970 at the neutral point of control there, and then just see if we can flip this, in which case that would be a really bullish sign as we embed on the Bollinger Bands to the upside. From here, I don't know, it could take a long time. This is the 2-day chart, guys. It could take a long time for anything to play out. So anyway, that's what I'm looking for. Bears don't grab control of this chart fully until we're under 25,204. And again, as long as we hold above that volatility pivot at 25,500, we've actually got a reset scenario on the 2-day. And as long as we're above the pivot on the daily at 25,371, we've actually got a reset scenario on the daily. So both of these were looking quite different than the 3-day and the 5-day on the volatility. And so let's go ahead and go back to the daily. Look at our volatility here. So let's say that this daily of volatility ends up just rounding over and killing over. Well, that could give the potential for a reversal on the chart. And let's say the 2-day, here's the 2-day, is pushing up but it really hasn't broken that 20% level, which I would like to see it do. And so this could, I was mentioning in the last episode, the daily and the 2-day could have a fake out. So we do have to be on guard for this, guys. And the reason why is here's the 3-day. The 3-day hasn't fully reset yet. Here's the 5-day. The 5-day is just resetting. Let's see what the weekly is doing. And the weekly hasn't fully reset yet. Okay, I mean, it's there, but it's just, it has a lot of work to do. And so that suggests that the day, whatever the daily and the 2-day are doing, which is basically what our current price action to the downside is based on, it could be a fake out. Okay, the other time frames, the other higher time frames, they're not ready to go. They're not ready to do anything. Okay, they're still just consolidating. And so if the 3-day and the 5-day and the weekly are just consolidating, and we've just been going sideways, consolidating for like 3 months, and the daily and the 2-day are just kind of jumping the gun to the downside, well, the 3-day and the 5-day and the weekly are going to have their say in it. Okay, and so again, now we are above the volatility pivot on the daily, and we're above the volatility pivot on the 2-day. Where previously it used to be over our heads, pushing us down, now we're above it. And if we close the day above these two pivots, there's going to be a chance for a reversal on the charts, guys. And so that just brings me back to this weekly, right? To this weekly Bollinger Bands midline. And let's just say that the daily and the 2-day are faking us out. Even if there's another drive down, if they're just faking us out, and the 3-day and the 5-day start to have their say in it, and they're saying, that's not going to happen, then we could see that flash wick back up, and we could end up seeing, that wedge scenario, that bullish wedge scenario. But this is the week, guys. 3.5 days left, and then maybe just a little bit of, I don't advise it, but just a little bit of a chance that the following week could have like a flash wick or something. But we have 3.5 days left to figure this out. We're still in the wedge. The day and the 2-day are above their volatility pivots, meaning any random volatility in the market could send them in an upward direction. And the 3-day, the 5-day, the weekly, they're still just consolidating. They haven't made up their mind yet. So if the daily and the 2-day end up getting a fake out reversal, or if the weekly ends up just pulling up really quick, then the bullish scenario could play out just like it happened over here. Okay. Just putting it out there because everyone is perma-bearish. And the only caveat is that our janky head and shoulders over here with a kind of like delayed reaction of a breakdown has a measured move to 23,000. And so if this thing does break down, we would expect to see that area get filled. It doesn't have to happen, but we would expect it to be filled. And if that happens, and if it takes like a week for all of that to play out, then we get embedded underneath the Bollinger Bands, and it could be sayonara, guys. 8 months of sideways potentially. And at some point, we will fulfill the measured move, but it doesn't mean that we have to flip it. It could be another dump. It could be another half year of sideways. So again, this week really matters, right? This week really matters. And this is the moment. This is the moment for the chart to prove itself. Guys, I think I'm going to end it there. You understand what's going on. And by the way, just because the chart has these risk on it, okay, that doesn't mean that we're doing a bad job or anything. All right. You guys got to remember, we've been using the alpha momentum. Look at this. Look at this, guys. Look at this. Okay, we've been using the alpha momentum pool strategy here. Look at this. It never got stopped out, guys. It's still going. All right. Above the Bollinger Bands, broke into the momentum pool, brought stop loss to break even, crossed it, reaching that volatility pivot. You flip that volatility pivot. Oh boy, things could get interesting. Neutral point of control, right? It's interesting, guys. I mean, our strategy is killing it. Yeah, we had a little tiny baby fake out. I'm so sorry. I lost $3 on a transaction fee. Okay, beautiful short, beautiful long. Boom, boom. Eh, we can make money no matter what the chart does. Okay, we can make money no matter what happens with Bitcoin. We are going to make money, and we are going to have these pristine entries that other traders can just dream about. They can only dream about the accuracy that I'm showing you guys. All right. As your alpha for the day, stay safe and happy trading.